From a business standpoint, it seems like they have a lot of debt. I think the plan was always to sell. As you know, they were originally Time Warner. Then there was a sort of disastrous AOL Time Warner merger. Then they were sold to AT&T, which didn't go well. AT&T then spun it off with Discovery. Led by David Zaslav. And now here we are just a few years later. Once again, they're for sale. So first of all, I feel very bad for the people that work there. It's
Yeah.
been a really tumultuous history. But they have to optimize the assets, right? That's their job as it relates to the shareholders. So I think they're trying to figure out an exit. I think there was a period of time where a lot of people felt that ultimately they could wrap these up and sell it to a big tech firm. I think that was the viewpoint of Sherry Redstone originally with Viacom and CBS and then ultimately Paramount. So I think they're trying to get the most value for what they have. Originally, like you had just talked earlier about the cable assets, the plan was sort of reflecting exactly what Comcast is doing, is spinning off its cable assets into Versant. The plan had been for Warner Brothers Discovery to split the company with their CFO taking the cable assets and the other assets, the Warner Brothers Discovery, the studio, and the HBO Max platform, the streaming platform, staying as one entity. So in that time, David Ellison has come out and made three successive offers.
Yeah.
The stock price has gone up, has effectively tripled since April. So their job is to optimize the value for their shareholders. And so I think that's what they're trying to do right now.
So what's a value here to a Skydance Paramount or to a Comcast or to a Netflix is the IP of Warner Brothers. You just go to the HBO app and you see Friends there. Sure. You see Game of Thrones. You see all kinds of assets that the company owns. That IP is valuable, but does it diminish over time? I mean, does it need to be folded into something bigger to maximize its value?
Yeah, well, so, in anything in media, we sort of always talk about the content and the distribution, right? You sort of need both. You can't just have great content. It has to be able to be discovered. And as we all know from, following the pandemic, our habits have changed. And a lot of us now, we stream content. So scale is helpful in that. So one of the value propositions for any of these buyers, whether it's Comcast, whether it's Netflix, whether it's possibly Apple or certainly Paramount, is Paramount Plus has struggled a little bit. So pairing that with HBO Max, you'd get a huge subscriber base, you'd get extra content. It's not that different than what Disney did by merging with Fox. Realizing that to compete with Netflix, they need a huge amount of content. So I think it's sort of the same playbook of scaling up, having a large, deep library that some people, when, we all have credit card bills, everyone has to check and see how they are spending their money. And if we're all subscribing to 5 or 6 or 7 streaming services, it becomes, uneconomic. So I think the idea is you want to be one of those 2 or 3 streaming services that, the family needs.
And Paul, what I think is one of the unique aspects of a potential deal with Warner Brothers Discover is you've got a CEO and a board that says basically, hey, we're open to doing a deal. We're for sale, kind of. How does that play into it?
Absolutely. Well, they've basically said that they've turned down 3 offers. And again, the stock price is more than tripled. So at some point the board is also going to have to sort of face the music and say, why they're not accepting this offer. So I think what they're looking for, right? They're trying to elevate. Having more parties interested is always good in any dynamic. So it's unclear exactly how interested Netflix or Comcast is. But some of those assets, just like, if you go to a consignment shop, there's definitely something that would be interesting. And I think that the benefit to Comcast, Netflix, any other people, giving access to the data room there is, first of all, you learn a lot about what your competitor is doing. So you get access to information. 2, there is a deal, right? They may only want HBO Max, they may only want certain IP, but there's probably a deal worth looking at.
Mm-hmm.
And then lastly, is sort of what Comcast did with Disney is you might also elevate the price for one of your competitors. So that's not a bad thing. It's you sort of, you're sort of the skunk at the picnic a little bit. And so I think all of those factor into it in a way. But there's no reason, I think it would be an obligation of duty from these other companies not to look at it, just kick the tires a little bit.